Welcome to ECCB Connects. In this week's episode, we will look at our country's performance in 2020 in the face of the COVID-19 pandemic. Stay with us, we'll be right back.
I remember the first time I heard about DCash. I was relaxing on my couch, then an email came through on my phone. It was from my financial institution inviting me to use DCash. They said it was the safer, faster, cheaper way to send and receive digital EC currency in the Eastern Caribbean Currency Union. I thought to myself, safer, faster, cheaper? This is interesting. So, I followed the instructions and downloaded the app from the App Store. Sign up was easy. I simply selected the option to sign up with a code. You could either enter the code manually or scan the QR code provided in the email. I chose to enter the code manually. Then, all I had to do was fill out the form with my name, bank account number, and some additional information. Double-checked that everything was correct and agreed to the terms and conditions. And just like that, my application was complete. The next day, I received an email from my financial institution letting me know that my application was approved. Just like that, I became a DCash user. To get started, I first transferred funds directly from my bank account to my DCash wallet. Thankfully, I could do that via my financial institution. Since then, I have used DCash to pay for all sorts of things. Groceries, I can send money to Auntie Shirley for her birthday, even pay my hairdresser. No hassle, no fuss. DCash, safer, faster, cheaper.
Welcome back. Thanks for staying connected with us. The ECCB published the 2020 Annual Economic and Financial Review in May. What are some of the key findings of this report? To discuss this, we have with us Beverley Labadie, Acting Deputy Director and Economist at our Research Department. Beverley, welcome to ECCB Connects.
Thanks, Valin.
So tell us, what is the EFR and what does it entail?
The Economic and Financial Report is a report that we produce twice a year at the Research Department. The first one, we look at the January to June period. And the second one, we look at the annual period, January to December. And we look at the features of the ECCU economies during that year, and we compare it to the year before.
What are some of the key findings that are coming out of the report?
The economy of the Eastern Caribbean Currency Union suffered a severe blow in 2020, and that stemmed largely from the impact of the pandemic. Our economy contracted by 14%, and we note that the tourism industry was dealt a really hard hit. Many of our citizens suffered economic hardship as they would have lost part or even all of their livelihoods. Some were thrown on the breadline, and therefore the governments were forced to step in. So we had a very unprecedented year in 2020. The governments had to come in to assist, and therefore what we saw is an increase in expenditure on the government side and simultaneously a decrease in revenue. So the governments too had to borrow to compensate for that. Now, not only did the governments borrow, we also saw in the private sector there was an increase in borrowing.
You said that economic activity in the ECCU declined.
Yes.
What are some of the main reasons for the decline?
In the review, we look back at the year 2020 and we analyze what happened relative to the prior year. That's what we normally do. So we looked at the ECCU's GDP, and GDP would be the total value of goods and services produced within our borders in that year. But if we look back, let's say for the recent 2 decades, what we saw the last time that the region had a sharp downward spike before 2020 was in 2009, and that was associated with the impact of the global economic and financial crisis. Now, economic activity was down at that time in 2009 by about 6%. So 2020 is really a historic year for the region, and that is coming from growth of about 2.7% in 2019. Now, when we look at the countries on a disaggregated level, what we saw that all 8 countries registered contractions in economic activity. And that was coming from an area where they all registered positive growth in 2019. And these declines, they range from 2.7% in St. Vincent and the Grenadines to 27.4% in Anguilla. On a more granular level though, what we saw is in the economic sectors is that the hardest hit sector was the hotels and restaurants. And that is what we use as a proxy for the tourism industry. It registered a preliminary decline of 63.4%. That was really huge. Other main sectors like transport, construction, wholesale and retail, manufacturing, and even agriculture also saw declines in 2020. On the bright side though, what we see is all these sectors are expected to turn around and perform better in 2021. If you want us to look deeper into the hotels and restaurant sector, we see that in the tourism performance, visitor arrivals in all countries decline. So on the global level, we saw a 74% decline in arrivals, but on the ECCU level, we had a whopping 65.4% within all our categories of visitors. So the stayovers declined, the cruise passengers, all categories of visitors declined in 2020. And that was in line with that decline, we also saw a decline in expenditure by visitors.
So Beverley, we know that tourism is a major contributor to the economies of our countries. And you did mention how much it was affected in 2020. Tell us, what other sectors were affected during that period?
Okay, the adverse impact on tourism activity had spillover effects on other economic sectors, and that include transport, storage, and communication. We saw a contraction in activity there. We saw by about 26%, and wholesale and retail, where we have supplies to hotels and restaurants, that activity fell by about 12%. We had construction activity down by 17%. We also had manufacturing down by about 9%. And even agriculture activity was down, despite a number of measures implemented by the countries to enhance food security. That sector recorded a decline of 7.7%.
And what does that mean for government finances?
As economic activity declined, governments responded to what was happening. Government has a way of trying to respond as much as possible to bring some traction to economic activity. So what they did is they gave concessions to assist citizens and businesses that were impacted by the pandemic, which in turn affected their revenue collection. So as a result of that, we saw that current revenue on the government side declining by about 17%. Also, current expenditure, we saw a slight contraction there, and that was associated with lower debt service payments on the government side because the governments were given moratoria, where that is a deferral or postponement of their loan payments, and that was extended to government. So as a result of that, we saw lower debt service payments on the government part. But however, expenditure on the goods and services, that expenditure was up, and that was driven by the increased spending due to the pandemic. So as a consequence of the lower intake of revenue, the current accounts yielded a larger deficit of about $500 million in 2020. And current capital expenditure would have increased mainly due to health-related infrastructure. The governments were spending more on retrofitting health centers and converting buildings to health centers to ensure that the COVID-19 patients had somewhere to be accommodated. So that expenditure would have increased. So overall, for the government, we saw a fiscal deficit, and a fiscal deficit of about $1.2 billion, and that's about 7% of our GDP.
Beverley, you mentioned what was done to assist the governments. How about the people? In 2020, what programs or what assistance were extended to citizens to curb the difficult economic time?
Well, a number of governments did a number of things, including their concessions on duty, and some of them gave what we call gave some grants and so to small businesses and so to assist them in the time. But the pandemic was taking its toll on the ECCU's economy. And so not only the government, but the ECCB also stepped in to support the government's responses. So we saw the ECCB came in early and gave $4 million grant to the member governments. The ECCB also made more credits available to governments. And for commercial banks, the ECCB also tried to assist the commercial banks as much as possible. They lowered the discount rate from 6.5% to 2%, so the commercial banks could lend from the ECCB at a lower rate. The ECCB also agreed to a number of customer-supported measures in the banking sector, and that also include moratoria for 6 months in some cases, and which were further extended to 12 months. They also agreed to waiving of fees, late fees, and charges. So the ECCB stepped, not only did the government step in, but the ECCB stepped in to assist with what was happening in the economy at the time.
What about the external sector? When we look at the performance of the ECCU during the period, how does that compare to the rest of the world?
Okay, what happened in the external sector is that we saw our current account, and this is dealing with trade of goods and services. We saw that we had a larger deficit on that account. So we had a decline in our imports, but at the same time, we had our exports declining because our borders were generally closed for a period of time during the year. So because of that, you have lower imports, but you also have lower exports. Then your current account balance deteriorated a little bit. So we had a higher deficit on our current account. So overall though, when we take into consideration the current account, the financial account, and all the other accounts on the balance of payments, we saw that ECCU was in a net borrowing position of about $2 billion. So we owed our trading partners. So when you look at our performance with the rest of the world, it means that we were net borrowers. We still owing the rest of the world.
So Beverley, you mentioned a number of things: economic downturn, you mentioned the strain on finances. What does that mean, or what did that mean for the people? What impact did that have on the citizens of the ECCU?
We saw that in the beginning of the pandemic, where a number of persons would have lost their jobs. So that would mean economic hardship for a number of people. So now you don't have your salary, don't have your income. That's going to have negative implications for you and for your family. So people were no longer able to save. So in the banking system, you would see a maybe decline in savings. People were no longer able to save. People had to borrow more. So you saw an increase in credit because you still have to pay your bills whether you have an income or not. So a number of people would have not just, some people totally lost their jobs, but there were people who lost parts of their jobs. So people, let's say in the tourism industry, would now have to work 2 hours rather than 8. All these had impact for income. Now, when people's income are impacted, then you have an economic strain because people can no longer buy goods and services, which would keep the economy going. So then you will have a decline in further economic activity. People can no longer shop as much as they would like to. Right? So this is where you had the government coming in. This is why the government had to come in, had to step in and really assist some of the people with their hardship. So the government had to give some grants to people. The government had to, even the tourism workers, they had to give them some concessions. Also small businesses, for them to be able to survive, they had to get some concessions. And some small businesses went out of business because they could not survive the hardship. So we saw schools, for example, schools closing down. You see now most of the schools had to try to go online to get the students to learn. So there are a lot of repercussions when things are going wrong one way in the economy. There are lots of repercussions for the other parts of the economy.
We are now in 2021, and we know that in 2020 there were hardships, there was a downturn, there was a decline, there was contraction in economic activity. Tell us, Beverley, is there hope?
There is still a lot of uncertainty on both the global and the domestic fronts. The IMF projects an expansion of 6% for the global economy in 2021. Our preliminary forecast for ECCU economy is for modest recovery. That's about 3%. And as we speak, these forecasts are being re-examined, so we may revise it. Now, the strength of the recovery is expected to differ by sector and by country. So the countries who are more dependent on tourism may take a little more time. Some countries may bounce back faster than others. There may be delays in global travel as the pandemic continues to pose threats. ECCB estimates that tourism activity may not return to pre-pandemic levels for some ECCU countries till around the end of 2022. Very importantly though, the developments with the vaccine rollouts, not just around the world, but in our region. Our ability to achieve herd immunity is paramount for us in an effort to experience some semblance of normalcy. Apart from the pandemic, there are a number of other risks that we face as a region. These include, we have the perennial threat of natural disasters. We have some volcanic activity in St. Vincent and the Grenadines that we have seen in 2021. There are issues related to climate change and an active hurricane season that is being predicted this year. So there are still a number of challenges, but in spite of all that, we are still expecting that the economy will bounce back maybe by about 2 to 3% for 2021.
That is great news, because we know after all the hardships and everything, it's good to know that there is light at the end of the tunnel. I want to say thank you for joining us today on ECCB Connects.
You're most welcome. It was my pleasure.
That's it for this week's program. Thanks for watching. Join us again next week for another episode of ECCB Connects.